I'm delighted to welcome David Buxton today, the CEO and founder of Arachnys. David, welcome to Fin Spotlight, and thank you for joining us today. Brilliant to have you on, especially at this sort of exciting time in the company's journey. And maybe just to kick us off, David, for those kind of people who don't know yourself or Arachnys, you could just give kind of a 30-second introduction to Arachnys and what you guys do.
Sure. So Arachnys is intelligent data automation for KYC and AML. So all of the data that you need to onboard any business fast. But I guess the exciting news from last week is that we were actually acquired by a US company called AML RightSource, who effectively is a services business that supplies our users to 80 of the largest financial institutions and fintechs mainly in the United States and Canada. And so the picture is changing a little bit, actually, as we speak, under our feet. So it's a very exciting time. And I only apologize if, I have to keep referring to this kind of, both the two entities separately and also the sort of like future vision for the combination as we go.
No. I mean, perfect. I mean, why don't we start there then and just kind of talk to that for a second. I want to come to it in more detail maybe later on, but how did that deal come about, and what do you think it does mean for Arachnys sort of for going forward?
Well, in all honesty, a lot of service providers or managed service providers have come to us over the years and have asked if we can partner, and we've stood up partnerships with a variety of them in different geographies. And basically the sort of value proposition is there that we're able to offer, or they're able to offer, a more efficient tech-enabled service to their customers, which is differentiated because it's cheaper, and it's differentiated because it's better, right? And so the conversation with AML RightSource started very similarly, but what I was really blown away by was that they have a much more expansive vision, right, which I've 100% bought into, which is basically how can you take essentially a services company and put it together with technology in a way that doesn't just make the services more efficient, but actually enables the nature of the services to move away from this kind of like time and materials model, right, where you sort of, as a purchaser, you're taking the risk on how much work can be done by one person in one expanse of time, a day, a week, etc. And really, trying to break that up and focus more on the kind of unit costs and unit economics from the bank's perspective of how do you actually do the work that you need to as effectively and as efficiently as possible, and how from a supplier side can we build models that actually share the risk on that essentially, or take the risk on that, because we're enabling our people with the technology that they need to be really efficient and effective. So that's really why I got excited, and I think that was the sort of model that we couldn't support through an arm's length partnership. We really needed to be part of one team.
And presumably the fact that they've already got 80 financial services clients and that reach in US and Canada is a big attraction as well, in terms of, okay, well, look, we can just expand our reach really, really quickly here and then provide, develop a really strong proposition to take elsewhere as well.
Yeah, I mean, crudely, there's like a big cross-selling opportunity in the short term because, they supply a lot of the users for the software that we sell. So to the extent they have users that aren't using your software, then like, why not sensitize their existing customers who are very happy with them in general to the fact that that's an option and could lead to further benefits. And to the extent, indeed, that our customers don't have necessarily a service provider or need surge capacity or have specific remediation projects, that's also an option that's open to them. So I think there's like a mutual kind of cross-selling benefit there, for sure. But that is very much, I think, the tip of the iceberg, because the real opportunity is to provide a kind of, well, I guess if you take a step back, right, it's not obvious that pure technology is, technology's been around for a while in the financial crimes world, but it's not obvious that like financial crimes problems are actually decreasing, although like no one would say that like technology has become less effective or less good, right? And on the other side of the spectrum, getting more people is extremely helpful. Being able to get them fast, being able to make sure that they're very high quality, being able to deploy them into whatever workflows you need them to operate, and not necessarily needing to take the risk of yourself employing those people is incredibly valuable. But it doesn't actually make the problem go away. It just sort of like makes it makes it less of a problem on a sort of day-to-day basis. I think what we're really trying to do is we're trying to say, hang on a sec here, how do we actually solve the problem, as opposed to just kind of, either supplying the people who kind of help keep it from being a business impacting problem,
Mm.
or just selling software which should enable customers to get better at the problem, but doesn't always, in itself solve the problem. So, how do we really like go to the heart of what financial institutions are struggling with?
And I presume, I mean, maybe that's a good segue into kind of, I really want to sort of understand how you came to founding Arachnys in the first place as well, and what your kind of driver was there. And presumably there was a kind of real like, maybe you can just talk about what you were doing at the time to sort of see what the problem, what the problem you saw was in the market, and how you thought, okay, look, here's the first thing we can try and solve to or at least improve.
Yeah. So I come actually from kind of third-party risk management background, which is like a slightly different one from a financial crime compliance background, although the two are very like similar. And some third-party risks are financial crimes like fraud, for example, right? Or like predicate crimes anyway. I actually came from a background where the sort of insight I had was that investigations at scale needed a lot of data to supply them and support them. That data was difficult to gather. The commercial data vendors that were out there aggregating stuff weren't doing a particularly good job of actually spotting the real risks. So engineers use two words to describe what are sometimes called, we've all become quite familiar with the idea of like drug trials, for example, and test sensitivity over the last like year of COVID, right? So they use the words recall, which basically is what you would call sensitivity, right, in drug testing. So it's like, do you find the evidence of the thing that's actually there? And they use the word precision to just as a synonym for specificity, right? So like, to the extent that you find something, is that finding correct? And what we found is that commercial data sources had very, very low sensitivity indeed. They basically didn't find anything useful, right? Specificity was also a bit of a problem because a lot of the things they did find were actually kind of unrelated to the real commercial risks that our customers were like worried about. And so in particular, we decided that what we would do is we'd put together our own libraries of content, and we would make sure that that content could be automated for investigators to do better research. And so in a way, partnering with AML RightSource, it is almost coming full circle on that vision, because I think what we're saying is like, right, we can now bring that back into the actual analyst workflows itself, rather than selling that software at arm's length to analysts who may or may not be using that software as it was designed, not through any fault of their own, but just potentially because of the lack of understanding by us of exactly what requirements they have, etc. So I think it's tremendously powerful, and it gives us a much better platform and a bigger platform to reach that broader audience.
So the sort of the problem state from your point of view was always about, okay, well, look, if we can get the right data and really the right types of showing the right types of risk, and give that to intelligent users and the skilled investigators or analysts, then they would be empowered then to make the right decisions. That's a sort of a big problem statement, right? In terms of like, okay, we're going to go and try and find out all the thousands, potentially definitely thousands of data sources out there. How did you guys, I guess, stay one thinking about, okay, we're going to form this company Arachnys, how are we going to go about solving this problem then, and getting all this data together? What were sort of those first steps and all those first challenges that you guys came up against?
Well, I think the first thing is to really survey the information landscape and to map it, right? And to sort of say, these are the types of information that are potentially at least available, and this is how they are available on a national or subnational basis, right? So, these are the types of agencies that publish the sorts of information that's available. These are the types of commercial providers that are available. These are the types of aggregators, potentially the supranational basis.
Yeah.
And so just really kind of categorizing that. And I guess the way that we generally think about the ways that the sort of broad categories that things fall into for us these days are really around kind of lists of one sort or another. So sanctions, PEPs, watch lists, sort of one pillar, I think, of most compliance processes. Those tend to be for situations where you want to focus on specificity, right? You don't have a lot of time for things that create noise in your process. And so, the sort of towards the higher automation, lower risk end of the spectrum. The second is media, because media is an extremely good catch-all for all sorts of different risks, right? Things that rise to the level of media attention tend to be tend to be moderately significant in many cases. The challenge is that the technology to deal with that media needs to be very, very sophisticated in order to make the process as not noisy as possible.
Yeah, yeah.
So that's a big technology problem to solve. And then I think the third area is really information about people and about companies. So sort of entity information in the broadest sense, right? Legal and natural person entity information. And so that's a combination of hooking into national level providers, into databases of various different flavors. And if you put all those things together, what you're able to do is you're able to build a profile quite quickly of counterparties and of customers that allows you to make good risk decisions about them. And indeed, if you're able to automate that, you're able to define the scenarios in which you don't need human intervention, typically, because you're confident enough in your search methodology, you're confident enough in the risk findings, I guess, the risk scoring that comes out of that. And that allows you to just to conduct your processes faster, and more importantly than necessarily being faster, it's that you're able to focus your attention on the areas where there is genuine risk, and you're able to deal with those in a proportionate way rather than in a way that is focuses unduly on relatively low risk things to the expense of things that are genuinely high risk.
And the sort of the problem you're tackling there, because it is big. If someone says to you from a financial institution, says, well, we get a bit of data from here, I think we can kind of do this ourselves, or something like that. What is sort of, the challenges that you kind of bring up, certainly around trying to access a lot of this data or bring it all together that you guys have really had to overcome, I guess, through this journey of putting together all these data sources over the years? What have been those sort of main challenges that you found in kind of, I guess, bringing it together, but also maintaining that?
Well, I think the thing that gives us our competitive differentiation is the fact that in order to compile this on a global basis, we've had to build these higher level tech tools that allow us to plug in new data sources quickly.
Yeah.
So, that fundamentally is sort of where our kind of differentiation is from any other institution. Now, to the extent you've got 5 things that are necessary for a specific process within an organization, I mean, I actually kind of think it makes sense potentially for you to focus on just doing this yourself natively without the added complexity and expense of dealing with a third party, aggregator vendor like us. But I think that, in order to do that, you have to have confidence. First of all, those 5 things aren't likely to sort of, as it were, change in number, right? You're not going to have to add, or you're not going to necessarily want to spend a lot of time on that. And so that requires you to be confident that regulations aren't going to change, right? Which is obviously something that very few people can have realistic confidence in.
Yeah.
And secondly, that allows you to have confidence your customer base isn't going to significantly change, your product mix isn't going to change, which seems to me a rather unambitious kind of hypothesis to make about one's business in general. So, what the problem we solve for people is how do you go from having needing 5 things for onboarding one type of customer or for investigating one type of customer in one geography through to needing suddenly 50 things because you've decided to add let's call it the Western Europe or something to your kind of target markets. You're suddenly dealing with different languages, with different vendors, with different complexities of exactly what information is available, etc., etc. Yeah. And what we can do there fundamentally is just provide a single layer and a single lens on all of this stuff. So you're integrating once and building on top of that backbone, and whenever you want to expand and whenever you want to offer new products, say you want to move from just offering something to consumers to offering something to businesses, you don't then need to go through a whole set of additional complexity to, for example, map the additional complexity of a business, which obviously a person is more or less just a person, right? Their relation typically not part of the kind of ambit of an onboarding process, for instance, or to a lesser extent an investigation process. Whereas a business, almost by definition, is something that brings together many different parties and many different relationships, whether they be directors or shareholders or counterparts, etc. So those sorts of complexities are things that are really troublesome to map. And so our recommendation is basically, if what you want to do is stick doing one thing in one place, then go for it. But if what you want to do is be ambitious about the nature of your business, then you could do worse than think about using someone like us.
I think the other thing we hear a lot about is actually just this is gathering information and this is kind of the non-value add stuff, or at least kind of this is fairly manual task kind of stuff. What you can really then allow people to focus on is that sort of value add focus on the information you're getting and the decisions you're making around that customer, rather than the gathering of the actual information, right? So it's I guess it's not just how ambitious do you want to be, but what do you want your people spending their time on?
Yeah, I mean, I think fundamentally, if you strip back financial crimes investigations, right, or for that matter, onboarding, right, so any of these compliance processes, what they're really aimed at is identifying, who is your customer, where does the money come from, what do they spend their money on, and does it make sense? And obviously, like, basically a computer in roughly, kind of descending order of like competence, right, is going to be pretty good at working out who they are, because like ultimately, you're typically not phoning up their neighbors, right? There are situations in which people, will do that, like at the top of private banking. It makes a ton of sense to like take references and do things like that, because you're moving colossal amounts of money around, and like, you're taking a lot on trust, yeah. But for normal people, or for even normal businesses, it's just not viable to do that, right? And nor is it demanded by the regulations. Like where does their money come from? Like to varying extents, you can kind of try and you can develop proxies for that. Where does the money go to? Again, you can look at sort of trade networks. You can look at all sorts of different data sources in order to have a good view of that. But you're also looking at internal data sources from your institution to work out sort of what are the spending patterns, etc. But does it make sense? I mean, like, if someone came along tomorrow and told me that they've developed an algorithm that like tells you whether or not those things like fit together as a story, I would be extremely skeptical on the face of it, because like it's just, there's definitely tons of situations where you can wave these things through on the basis they do make sense, like, oh, this is a regular salary, it's coming in every month, et cetera, et cetera. But there's a lot of situations that an algorithm is not going to obviously be able to sort of wave through as kind of making sense, right? And those are the situations where humans need to get involved.
Yeah.
I think so, basically, like it creates space and time for people to make those value judgments, which people are pretty good at,
Yeah, and I think that's right, and it's just taking away sort of, okay, well, look, you can either do this through this way, or fairly manual way, or you can go through this more data kind of centric or automated way. What's the just thinking about the data challenge a little bit, and there are sort of information which is harder to get hold of. There are jurisdictions which are harder to get hold of information as well. How tricky have you found, or how have you overcome some of those challenges in some of those areas where certain entity types or certain jurisdictions or certain regions even that you go, oh, that historically or even today it's difficult to get that information, or it's held very closely to a very few parties? Have you been able to overcome some of those?
So I think there's a couple of different areas here. Like, so first of all, in general, access to information on entities, companies, is becoming easier in the world, and in general, information on people is becoming more difficult in the world. Like those are like macro trends driven by privacy concerns mainly on the latter end, and transparency concerns on the former, right? So you have sort of two slightly different like waves of motion, right? That's sort of the dynamics of the market. Also, I think there's sort of regional differences. The US, it's much easier to get information on people than almost anywhere else in the world, and more difficult to get information on companies than most places in the world. And most other places are the opposite way around, right? So there's quite a lot of complexity there. So, in terms of kind of like how we overcome that, I guess the first answer is just like tons of partnerships that go beyond the kind of, that both leverage what's publicly available, as it were, and also specialist vendors that may have access to like derived data sets, or, very, specialist things that might not be, your first port of call if you're doing this kind of naively, so to speak. So, we have a lot of expertise in terms of like what is available, but we're not going through people's like trash to like find a kind of that's not the vibe at all. So, what we're not doing is we're not getting information that's secret. I think that one of the really core things, though, if you're actually operationalizing this stuff, in a sense, it's less important for you to necessarily know as it were, what the answer is. And but it can be incredibly important for you to know at the outset of a process, whatever that process be, whether or not there should be an answer to a question that is obtainable or achievable automatically, or in some sort of semi-automated or fully automated process. Because, for instance, if you know that you're not going to be able to find out, I don't know, the shareholding like percentages of like a Luxembourgish trust or something, or whatever it is, that's a bad example, then you can actually like make sure that that is included in the request pack that goes out to that customer, right, when when you're onboarding them, rather than waiting for 3 weeks and then like discovering that this is like a necessity, but it's also something that like just can't be gathered internally, right? And so I think it can reduce the frustration of dealing, from a customer point of view, of dealing with these like endless data requests. And I'm sure even many of the people listening to this will have had these frustrations and complexities as a consumer, right? Much less as a business owner, where you're sort of constantly getting requests for data that you feel like either have been shared already in many cases, right? Or should be something that can easily, the amount of times people ask me for my articles, right? It's like, well, yes, and I can give them to you in the nicest possible way. You could also just get them from Companies House, right? Because we have to by law file them there. So like, can you just do that as a first point of call rather than like spending my time on it? And so there's just a ton of opportunities for the customer experience to be improved by better knowledge about like what the data availability picture looks like. And the reality is most organizations, from a customer experience point of view, most organizations that are using jurisdictions where the level of corporate secrecy, for example, is high, are generally prepared to provide this disclosure and actually like know that they need to. But it's actually more frustrating in a way where the information is available for customers to be constantly asked for like stuff that actually, the counterparty can find out perfectly happily themselves.
Yeah, I think that there's been a sort of the discourse, I guess, in the industry of like this panacea of STP and all that, and that's only going to work in certain situations where that information is available, and you kind of but in other situations, I think you're right in saying that what you should have at least is understand what there is available and what you need to then ask the client for, and you can do that as quickly as possible. From your experience of, I guess, of this process now, and you guys are about 10, 11 years into your journey now. What's the best sort of what's the best in terms of the STP rates, and what kind of scenarios does that really work best versus where and maybe where's the sort of average do you think, or do you even kind of, is that even fair to say where an average is, because every business is so different?
I think every business is so different. I mean, it's generally easier to get good straight through processing rates with simple businesses, but ironically, they're not the ones that take tons of time anyway. And so like, I think the reality is like it's actually more about thinking, if you think of a company in particular, so straight through processing for individuals is really not very difficult, right? And in general with consumers anyway, you don't mind rejecting them, because at the end of the day, like, they're not really worth enough for you to care about any given one. You're really focusing on your overall kind of risk ratios, right? Whereas with a business, especially with a big business, you might actually come under a lot of pressure. That we've seen with Greensill, right, this week, if you've been following it, that like, at Credit Suisse, they apparently extended a loan over the objections of like the local risk managers. Obviously, it's not like an onboarding thing, but it's a similar kind of thing. There's going to be like pressure commercially on these organizations to make a positive decision, right?
Yeah.
And so I think that the right way of thinking about this is like a company is like a complex web of individuals and entities, right? A group is like this complex web. And what you really want to do is you really want to be able to cover as much of that web as possible. And it's not necessarily important that you're able to get to 100. I think the wrong metric for you to track is like, can we get to 100% of this entire group automatically? Like, I think if you're aiming for that, then you're almost saying, I mean, not quite by definition, but close to by definition, that you're not going to really be able to do this for large companies. But really what you're trying to do is you're trying to focus on those areas that, can't be kind of like, green lit automatically in a specific web. And I think there's a couple of different like processes and scenarios, or there's a couple of different methodologies that can really improve this. That, firstly, is making sure that you're being smart about resolving entities across the different organizations that you deal with as a bank, for example, right? So that you're not, for example, onboarding a director multiple different times, right? You're leveraging what you already know, right?
Yeah.
Or if you've got an SPV, that you're leveraging your knowledge of what the overall group hierarchy looks like. And so I think straight through processing, while the irony is that if you focus just on the data side of it, in exclusion of this kind of wider kind of entity resolution piece, right? You might actually think that like it's impossible to have a lot of value from these like big complex organizations, but actually if what you're focused on is like both the entity resolution, like plugging in new knowledge to an existing sort of knowledge base, then actually like the value is disproportionately high, right? Does that make any sense at all? You're building out a knowledge graph, right, of the world, rather than kind of just like in isolation, like can we onboard like British Petroleum or BP, as they know, you know? And obviously, like the answer to that is just like no. I mean, like it is too complicated. Like, you know, there's tons of things that they don't tell you. Even if they tell you all the things, you're going to have to check like a large number of them. But, you know, can you when you know when they want to onboard their kind of Orinoco exploration subsidiary, which is like registered in the Seychelles, can you do 50% of like what you need to and plug it into the overall entity matrix in a way that means that you really only need to ask 3 questions in order for you to stand them up a, you know, like account somewhere? Then yeah, I mean, I think that's like very realistic.
I mean, I mean, based on your experience as well, you guys have seen lots of different financial institutions at lots of different stages of this kind of, I guess, sophistication and automation and you know, sophistication in those processes and methods as well, as you talked about there. How much further do you think some of these institutions or how far in their sort of automation journeys or sophistication, you know, how mature is the industry right now in your view, and how much further does it have to go? And
so I think there's a sort of like incremental answer to that, and there's a kind of like revolutionary answer to that. And I think the incremental answer is like there is a lot further that can go, but to some extent it's got to the point where the gating factors are, you know, more generic data availability, which you point to, maybe a little bit kind of like creation of like derived data sets and stuff like that, which you know, we're seeing really interesting stuff being done with trade data, for instance, which allows you to sort of provide an alternative layer, also gleaned from official sources, right, like government bodies like the Customs and Border Patrol in the States, right, but of like the actual trading relationships between organizations. Yeah. And so I think that kind of incremental journey like has a way to run, definitely, but like there's some sort of external factors. And I think that also like on the other side of that, you're going to see privacy potentially being something that makes it more difficult to design systems which like map knowledge on a kind of like, you know, this kind of like network basis, because, you know, it's going to be more and more difficult for banks to justify holding this information for any longer than they have to, right? So that's going to be like one of the countervailing challenges, I think. And I'm not like a Cassandra about privacy. I'm also, you know, I'm like profoundly interested in it, but also quite confused, I think, myself. Like it's changed within our lifetimes, you know, frankly. If someone had told me 10 years ago that like, you know, you wouldn't be able to track cookies for a visitor to a website legally in the European Union if they deny you permission, I would have said, like, I think that's just unrealistic.
Yeah.
Yeah, it doesn't sound like this. And, you know, here we are, like every single website you ever visit has like this thing allowing you to switch them off.
Yeah.
So those are the things that I think are probably, those are the sort of like incremental forces. I think the kind of like more structural thing is like, and this also might be impacted by privacy, but I think the real complexity and the real benefit comes from entities more generally is, you know, are there kind of bureau models or utility models that allow financial institutions to share the burdens of dealing with individuals and organizations from an onboarding point of view, because it's not obvious that financial crime outcomes are better as a result of forcing everyone to do it separately, right? Or as a result of everyone in fact doing it separately. It's not clear they're being forced. And it's not obvious that there are strong arguments against that type of model from a kind of principles perspective. And so that's the sort of, I think that's the kind of, what's the word? Not the wild goose, but that's the holy grail, I guess, of this whole industry, and has been for a while. I think the problem there is like it's been proven multiple times by failure that like it doesn't actually seem to work quite to do it that way through a utility. I think there are opportunities there for a innovative solution. I think that there's a role to be played there by things like, I don't want to use the word blockchain, but like things like smart ledger technology. I think that fundamentally, though, the problem is that all organizations are executing these processes rather differently. And I think that's actually been one of the biggest challenges from a technology perspective, is that because the drivers of success are not fundamentally financial in most regards, for certainly not for AML, to a greater extent they are for KYC, for onboarding, right? You know, the more quicker you're able to onboard customers, better customer experience, like you make more money from them, they're happy, they stick with you, etc., etc., etc. So there's like real connection to financial outcomes there. For AML, it's less obvious there. And so I think one of the most difficult things in general in this industry is like, it's not clear that there's a universal, what people talk about as like a utility function, whereas in something like fraud, it's pretty obvious that there probably is a universal utility function. The way that you stop fraud might be slightly different, but like everyone is basically trying to make there be less fraud, right? You just want to like lose less money to it. It's not completely obvious that those outcomes are well enough defined in this area. And I think that's a very difficult thing to build a single technology backbone for.
I think you're right. I mean, and certainly from the KYC utility point of view, been tried, and I know that the Nordics are going through that process now as well. Interestingly, I think in Holland they're trying the transaction monitoring utility, which is from an AML perspective, which will be interesting to see the results from that. I guess I think from our perspective and what we see is just probably a point you picked up on there, which is just everyone has different models. The way they do this is different. So actually aligning people at that level and what's the gain from their perspective at the moment? Are they still just in some ways trying to make sure from a regulatory perspective that they're being compliant and they're doing what they need to do? Where's the financial incentive for them to do those extra things until they're forced, or and it's more at a government or supranational level that those things might just not happen, frankly, because it's too big, it's too complex, it's not in their immediate interests.
Well, I think it's like globally optimal versus locally optimal solutions, right? It's pretty clear that like if, in fact, doing this once, if to the extent you could achieve it, and then drawing on a single record or something that's stored at some like utility level, is a model that works in other areas. You don't find people who do credit checking independently. The banks don't each have their own credit checking departments for like consumers, for instance, right? The cost just doesn't work basically from a business model point of view. And the so it's just it's not clear that people are able to make that level of investment work, both in terms of organizational change internally to like kind of align, and also in terms of just like the pure cash to actually sort of set something up and make it work. So I'm broadly speaking optimistic. I think it's like, it feels unlikely that something that doesn't involve some sort of collaboration between organizations won't evolve. I think my guess is that the answer is probably around something that grows out of bilateral information sharing and evolves into a multilateral type system, rather than something that starts as a multilateral system. Because I think what we've seen is that multilateralism is just like really difficult in general. I think, like in the world, it's difficult, right? Look at like vaccine rollout. I mean, like, come on, these are like hard problems to solve, even when lives are literally at stake. Whereas it's actually kind of easier to cut deals. And so, to the extent that Goldman Sachs and Credit Suisse think just to pick two institutions that run them, think that they actually more or less are aligned on like, our customer base is pretty overlapping and yada, yada. I think this is like a big business risk for us. Like, let's just like try and aim to reduce our cost by 30% each or something. And then other people can plug into that model. What that model needs though is like the right technological fundamentals so that it can start off that way and then build up. And actually the opportunity I see is even within a single institution for you to be able to kind of leverage multiple different relationships and different levels, whether it be a private banking relationship with like the major shareholder of an organization, with the kind of, the different companies that they control, with the kind of consumer accounts of the people who are on board, etc. Even just that within an organization is currently not really possible within most organizations' models. And I think that kind of almost arm's length type stuff internally, there's an opportunity for that to grow into a inter-organizational thing. So I think this is all starting small and building up big. And unfortunately, most of the initiatives so far have been all about like, let's have our, chief risk officers all get together and argue about whose risk model is the best, or, whose like, model works best. And no one ever built a statute to committee kind of thing, unfortunately.
No. Yeah, 100%. I do want to talk a little bit about the future then for you guys, and what it's obviously exciting news we picked up at the start in terms of the acquisition. What do you see as sort of the next few years for you, and how do you think your technology, your solutions are going to develop, and maybe as well, in light of that acquisition as well?
Well, I think the reality is, like, we've been extremely successful at selling technology into a, like, quite difficult market, right? But what I've seen certainly over the last 10 years is that it's incredibly difficult to build one single product which like rolls up the entire market in this area. I think we've seen a tremendous variance in demand from different customers in terms, even for like not notionally the same thing, right?
Mm.
And I think that what that's taught me really is that, in order to actually solve, quote unquote, the problem, right, for our customers, the sensible thing to do actually is to wrap the technology that we have to a greater extent in services that allow it to be very, very specifically targeted at like the specifics of their organization. However, the challenge that I've had strategically is that it's basically value destructive to add services to a technology organization. Like that actually just like doesn't work from a kind of like a business model. Like everyone's like, why don't you just like make a big bonfire with my money? It's like quicker. Technology businesses are typically valued on a kind of low double-digit multiple of recurring revenue, right? Whereas like services businesses are typically valued on a lowish double-digit to highish single-digit multiple of EBITDA, right? And so you can really there's just like completely different valuation metrics, and you can like create a lot of upset shareholders very quickly by like trying to go from the good model to the bad model. Now, what I think is so amazing about Emma Rice was they built an incredibly successful services business, and so there's just massive synergies in the joint entity for this story, right? Which takes where the narrative is really, look, you're buying our employees on a time and materials basis to solve your problems, but like actually in the long run, rather than paying a whacking great enterprise license fee for the software and a like pretty decent chunk of money for someone high quality and trained who comes and sits and operates the levers, why don't you actually like crystallize that into like the actual outcome you're trying to achieve and pay us based on that outcome? And I think that's really the kind of long-term vision is, and I think that it's essential to have this alliance, services and technology in order to do that. I think that both of them are essential, and so it's really like that's why I was so excited about this, and that's why we thought this was a good deal for us.
And there's a huge, I guess, value proposition there for the financial institutions, because it gives them certainty about what they would be paying, right? Because it's for an outcome rather than a sort of T&M where it's an uncertain outcome.
Yeah, and also it's coming from a position of trust, because they already trust the services component to do the job well, right? And they already trust the technology to be capable and competent. So I think it's amazing to be able to put that together on exactly to give everyone certainty. And it gives us a massive opportunity, frankly, and massive incentive for us to really focus on innovation in order to make ourselves more efficient. Because once we've kind of agreed a price point, in the nicest possible way, our incentive is to like hit that price point and carry on going, right? And so that is a great place for us to be in terms of innovation and in terms of specialization, and just in terms of pure technology, honestly, because we're only going to be able to deliver that value proposition to the extent that we really like fulfill the technology part of that deal.